welcome to the first educational video on my channel. This is going to be the start of a little series just covering the basics of Forex trading. Even if you've been trading Forex for a while, I'd definitely recommend watching all the videos here, just because there might be something you weren't too sure on, or I might have a different approach to the markets that you might be able to learn from. So this video is going to be on risk management, and I'm going to be covering how much I'd recommend risking on the trade, as well as things like how to calculate pips and lot sizes, over trading, leverage, and the martingale strategy. First, I'll just talk about risk reward. So I've got 3 setups on the screen here. In this first one, the good thing about this is that you will have a high win rate. So if you do struggle with psychology, it could be good, and it's good for beginners because obviously you're winning more trades, and so you're not getting scared during a losing streak, which can make you hop between different strategies, which is never good, but it's something everyone's done, so that's something to avoid. The con is you get low profit. Obviously, you're only making half as much as you're risking, and so it does take a while to build up your equity. The second one is a 1-to-1. This isn't too bad. You can expect maybe a 50% win rate would get you to break even. I'll put something up on the screen in a minute talking about that, but yeah, the pros and cons, you've got an alright win rate and alright profit, but the main risk reward that I use is a 1-to-3 or more. Generally, I'm aiming for like a 1-to-6, which does mean my win rate is a bit lower, but because I'm quite experienced and I can handle the multiple losses in a row, this just suits me more. So yeah, you get high profit but lower win rate. Next, I'll just talk a bit about risk management. So I'd recommend risking anywhere from 0.5% to 3% on your trade. This depends on lots of factors, such as your risk appetite, also what you're trading. For example, if you're on a funded challenge, I'd only risk 0.5% until you maybe got like a 2 or 3% buffer on your account of profit, and then you can increase your risk to maybe 1% is something that I would do. On my personal account, however, I risk 1%, but you could risk 3% because even risking 3%, you'd have to lose 33 trades in a row to blow your account, and that's quite not something that people realize, I don't think, because I've blown accounts in maybe 1 or 2 trades, and so it just shows the importance of risk management. If you can manage your risk, then it's basically impossible to blow your account. So after watching this video, I hope none of you go away and blow any more accounts. That would be the one thing to take away from this video. But if you are having trouble managing your risk, just send me a message on Instagram or leave a comment if that's easier, and I'll try and help you out. So something that's important is knowing that you don't need a high win rate or a high risk reward to be profitable. You just need a good expectancy, which is like how much you can expect to make per trade. Because if you look at this here, even with a 20% win rate, if you have a 1-to-5 risk reward, then you can be profitable, and you need a 1-to-4 to break even. Similarly, if you have a 60% win rate, all you need is a 1-to-1 to become profitable. And so it's just about finding the balance, what suits your personality. Yeah, but feel free to take a screenshot of this and just save it. Now, to calculate your lot size, I use this website called Cashback Forex. I'll leave a link to it in the description if you want to check it out. It's really useful, I find. But basically what you do is you just put in the currency pair that you're trading. For example, GBP USD, which is the main one I trade. You can put in your deposit currency. I use pounds, so I'll just select that. And then you can put in your open price and your stop loss price. But if you're doing it based on pips, you can also switch it to pips, and then you can put how many pips are. Go back to that, and then you can put in your account balance if you want to risk a percent. Say you want to risk 1%, it will calculate it for you. Your lot size 0.5 there, but you can also risk a set amount. So say you want to risk just £10. Yeah. One thing to be careful of though is if you're trading indices such as the Nasdaq, just check what your broker's contract size is, because it will affect what lot size you need to use. But for Forex pairs, the contract size is always just 100,000. So, one lot would be 100,000 units of the base currency. So, for GBP USD, one lot would be you trading £100,000. Yeah, hopefully this can help you choose the right lot sizes, which does help a lot with risk management, because you need to be strict on only risking, say, 1%, if that's how much you're doing it every trade, not changing all the time. So before I get into the martingale strategy, I'll just talk a bit about leverage, because there's a lot of misconceptions around it. But basically what it does is it allows you to open larger positions with your equity. So let's say you have £200 of free margin. What that is just basically money that hasn't been used up already. So if you don't have any open trades, your free margin would just be your balance. And let's say you're trading with a brokerage that offers you 1 to 500 leverage. The amount of buying power you have is your free margin times your leverage. So in this case, you'd have £100,000 worth of buying power, which means you could buy one lot of GBP USD, because the money you need to open that position is based on the first bit of the currency pair, and then your profit currency is the second one. Some people say high leverage is detrimental to your trading. As long as you have good risk management, then in my opinion, the higher leverage the better, because you don't need as much money in your brokerage account to open that position. Okay, so I'll just talk a bit about the martingale strategy now and how it works and why you should not trade it. This is not a strategy that I'm introducing you to so that you can go ahead and use it. So you might be familiar with the martingale strategy used in roulette, where, for example, you'd bet £5 on red, and if it wins, you win £5, and if it loses, you're now down £5, but you double up, and so you bet £10 on red. And let's say it lands on red. Now you've earned £10, which covers the £5 loss and puts you £5 in profit. But the problem with this is that your wins are small and your losses can be infinite, because there will be a time where you lose multiple in a row, and then you're risking, say, £100 just to make that £5 back. This strategy can be applied to Forex trading, and it has been by a lot of people. A lot of people who would probably end up blowing their account at some point. It can work in the short term, but it's not sustainable because of the Forex market's tendency to trend. For example, here, let's say you bought 0.01 lots, start small at 1.21 here, but then price goes against you, but you think if you double up, then if it goes back up, you'll make your money back. So you buy 0.02 lots at 1.208 here, but price doesn't go back up and it keeps going down, and now you have to buy 0.04 lots at 1.206, and again price just keeps going down and down and down until now at 1.2 you're buying 0.32 lots, which is 32 times your original lot size. And this is where risk management just goes out the window, and you just start to gamble because this is such a strong move down and it doesn't return up, and you'll eventually, unless your account size is big enough, you will end up blowing your account. So just stay away from this strategy. I mean, test it on demo if you want for a bit of fun, but definitely do not do it in live trading. But yeah, this is what I used to do when I was trading with expert advisors. This is a lot of their strategies, which is basically just automatic trading. If you want me to make a video on that, then I can. It is quite interesting. Just let me know in the comments. So if you do have any questions, just feel free to leave a comment and I'll try my best to help you out. But otherwise, I'm going to leave it there for today. So thanks for watching, and make sure to like and subscribe if you liked the video.